Welcome to our comprehensive guide on Rwanda tax residency. If you're an expatriate, an international investor, or a digital nomad, establishing tax residency in Rwanda can be a game-changer for your financial future. This East African nation is not only one of the fastest-growing economies in the region, but also offers enticing tax conditions that can significantly benefit your financial strategy. In this video, we'll walk you through everything you need to know about becoming a tax resident in Rwanda, from understanding the qualifications to exploring the numerous advantages that come with this status. Let's start by defining what tax residency means in Rwanda. Essentially, your tax residency determines where you are liable to pay taxes on your worldwide income. A crucial aspect of this is the 183-day rule, which states that if you spend at least 183 days in Rwanda within a tax year, you qualify as a tax resident. Interestingly, these days do not need to be consecutive, meaning you have the flexibility to travel while still meeting this requirement. Understanding these definitions and requirements is vital for anyone thinking of making Rwanda their new home, whether for business or personal reasons. So why is establishing tax residency in Rwanda so appealing? First and foremost, Rwanda boasts a favorable tax environment designed to attract skilled professionals and foreign investments. With personal income tax rates ranging from 0% to 30%, many find these rates much more appealing than those in higher tax jurisdictions. Furthermore, the government offers various tax incentives, especially for certain sectors, making it an ideal choice for businesses looking to thrive in a competitive landscape. Imagine all the financial growth opportunities that await you in a system tailored for success. Now let's address how you can establish this tax residency. The easiest path is meeting the 183-day presence requirement, but that's not the only option. You can also qualify by establishing permanent residence in Rwanda, which emphasizes your intention to make Rwanda your home rather than simply counting days. This could involve showing evidence of family connections, business activities, or community involvement. Additionally, appropriate immigration documentation, such as residency permits, is essential for legally residing in Rwanda and obtaining tax residency status. Each of these steps is vital to navigate smoothly through this process. As a tax resident, it's crucial to understand the tax implications that come with your status. Generally, you will be taxed on your worldwide income, but don't worry, Rwanda has double taxation agreements with various countries, preventing your income from being taxed twice. These agreements typically offer mechanisms for tax credits or exemptions, allowing you to optimize your overall tax position. Moreover, compliance with tax filing and payment obligations is necessary, as failure to comply can lead to penalties. So make sure you're well prepared. By working with a qualified tax advisor familiar with Rwandan law, you can identify exemptions and deductions that will truly maximize your tax benefits.